while the economy's growing 30%, equities are ripping along at 300% gains. So, it doesn't take a rocket surgeon to recognize that those two can't do that sustainably.
SDBullion.com is a high-volume physical gold, silver, and precious metal dealer. Founded in March 2012 with the goal of providing the lowest cost bullion available, SD Bullion has become one of the largest US-based precious metal dealers and is regularly recognized by Inc. magazine as one of America's fastest growing companies. SD Bullion continues to gain industry market share by being one of the premier low-cost options for physical precious metal bullion buyers and sellers. At SDBullion.com, you can order your guaranteed physical precious metal bullion products online, 24 hours a day, 7 days a week. Discreet, low-cost delivery is both fast and always fully insured. We are committed to being your trusted source for low-cost, highest quality, investment-grade bullion products. Visit SDBullion.com for more information.
Hey everyone, this is Elijah Johnson with SilverDoctors.com, and with us today a new guest, David Collum, professor of chemistry at Cornell, and he also has an interest in finance. He does a lot of work in that area. David, thank you so much for joining us today.
I'm thrilled to be here. I've been hearing about you for years, but we've never actually communicated. This is great.
Well, thank you so much. Yeah, it's a pleasure to have you on. Now, I guess, did you want to tell our viewers how a professor in chemistry got so into the financial realm?
As a kid, I kind of liked the stuff. My dad was a contractor, and we used to talk about real sort of street-level economics through the eyes of a guy who really knows how the economy runs. And then somehow I never followed that path, and it certainly would have been logical. And then I would say I ignored it completely. I ignored politics. I ignored everything. I just did chemistry for about 1995 and then 93, I guess, maybe. And then I got interested, and I was a total neophyte, and I was a tech bull. I thought the new era was going to be fabulously wealthy and stuff like that. And around 98, I started to do the math and started to notice things were out of balance. And so but in two slugs, late 98, and mid 99, mid 98 and mid 99, I dumped all my equities and really went into fetal position because I concluded that the markets were historically completely and utterly out of whack. And that's when I started buying gold and silver. So I was 2 years early. And so I was buying gold and silver while they were hovering, below 300 in gold and below $4 in silver. And then patiently, anxiously waited for them to bottom in 01, and then did really well while everyone else was getting brutalized. And I survived the 08-09 crisis pretty well because they didn't do too bad. And, the one big mistake I made out of, I would say, 4 decades was I pretty much sat out the equity run that we've just witnessed, but I think they're going to give it all back. I literally think they're going to give it all back. So I would love to have caught it, but that's just day trading. So,
like, how low do you think stocks will be going?
Well, sort of the base case is that if you look at about 20 different valuation metrics, there's a ton of them out there, right? The one you don't use is non-GAAP PE ratio, forward-looking PE ratios. That's the one that's for fools. But there's a bunch, and they all show us that in the depths of 09, we had reached historical fair value. So people say, oh yeah, equities were deeply undervalued in 09. That's not correct. Maybe it is, but none of the metrics show it. They spent about a month under fair value. That's how quick it was. And now they've gone up massively. And so it's easy to make a case, and I did this year, make a case that that they're somewhere between, sort of a factor of 2 overvalued, maybe even a little higher than that. Some people would take it, 150% overvalued, something like that. they will give it all back because the economy grew on average about 2.1%. So while the economy's grown 30%, equities are ripping along at 300% gains. So, it doesn't take a rocket surgeon to recognize that those two can't do that sustainably.
Now, you've talked about how, you got into precious metals very early, right before the bottom in 2001. Now, for people listening, I mean, it seems like we've seen gold, quintuple probably from that, and silver, go up. I don't know if it was, $4 then, it's more like $16 today. Some people think they missed the boat, but you're actually thinking that right now, as we're moving into, as we've moved into the new year, we're seeing gold and silver go up a bit. You're actually thinking metals are picking up momentum right now.
Yeah. So I was buying gold up until about so long ago, but I think I was buying pretty regularly until around $450 an ounce. And I remember I used to have a standing offer at a local coin dealer, said, you get any ounces, I'll come down, I'll pay cash. And so I just bought it in these dribbles, a few ounces at a time. One day he says, when they're $457 an ounce, he says, I remember this vividly, he says, don't you think this is the top? And I said, how many people are buying gold from me? And he said, 3. And I said, and 2 of the other 3, the other 2 I sent to you, didn't I? And he said, yeah. And I said, does that sound like a mania to you, right? And the answer is no. And so I thought I was a genius when I was sitting at 1900. And then it got pulled back. About 2 years ago, it seemed to have stabilized in the 1200s. And looked like it was really going to camp there for a while. So I started buying again, and I added, what's the best way to describe this? Probably 1 or 2 annual salary equivalents of gold. How's that? And now I'm done. I've got 25% of my assets in precious metals, and that's enough insurance for me. Is it going to go up? I don't know, but we've got a deficit rising at 6-7%. And we've got a GDP growing at, 2%? And some people say 3. I think it's one off. Those are, I think, spurious numbers. GDP could pick up, but deficit definitely is going to pick up. And so we're a number of years behind Japan, but we are heading for an insolvable problem where the growth of what we owe is simply outstripping our ability to keep up.
No, you've been saying that the economy right now is actually tanking, and it's been tanking for a while. Can you explain why you think that? Because some people are saying, the economy is doing great, and we've seen this huge stock market run up right now, and they think everything's just fine.
Well, the market's not the economy, first and foremost, and it's not even close. There was an inflation that went stealth because the inflation went into financial assets instead of into cost of goods and services. 2.1% growth per year for 10 years is simply not a good economy. This year, last year, should we say, 2018, there were some one-off boosts to the economy, which include, they say the hurricanes from 17 were still doing a big rebuild, and that showed economic gain. Supposedly the tax repatriation produced a big gain in economic activity, but I'm marginally skeptical of that because it's not like the money wasn't already in the system. They just hadn't paid taxes on it. And then the one I think is important was the tariffs. And you say, well, tariffs are bad for the economy, but not during the period before the tariffs when companies were furiously trying to do all the activity they got to do to front run the tariffs. So there was a huge amount of import-export going on because the tariffs were coming. And so we got this big, sort of the body, the economy sort of did this big paroxysm. It just flinched. And so once the tariffs come, then it'll go in the other direction. I mean, it seems like it's got to be a problem. Inflation, wage inflation has got to be picking up. That'll cut into profit margins. That'll cause valuations of equities to soar or prices to plummet. One of those two has to happen if profit margins shrink. And so there's just all sorts of metastable situations that just look to me like they can't survive for too much longer than probably I think, but not that long.
And how will all this with the economy tanking, how will this impact the precious metal markets?
I don't know. Boy, I wish I did. I think a bigger issue than that is, and gold and silver are not an inflation hedge in the usual sense. If you've got a small amount of inflation, you're better off owning equities, right? If you've got a small amount of dirt, you use a shovel. If you have a large amount of inflation, I think gold works really well. Large amount of dirt, a bulldozer, right? So you have various ways to, there's various tools for moving, for dealing with inflation, dealing with dirt removal, and you don't confuse the two, right? So if we got a wild run on inflation, I would hope, in a sane world, it would take off, and we wouldn't win, but we would be the non-losers potentially. I think a bigger issue is one where, you keep hearing rumblings of this, but I think there's a real chance that some very powerful other sovereign states are positioning to protect themselves against this dollar hegemony thing. If I were Russia, I were China, I wouldn't trust us as far as I could throw us, right? Because we will use the SWIFT banking system to exclude them from the global economy if given a chance, if push comes to shove. And so they're basically separating themselves from that check clearing mechanism. And China and Russia keep accumulating gold, which I'm guessing is because they know that will take them away from the dollar. One could argue there's some evidence the Bretton Woods agreement that put the dollar as top dog is starting to show cracks. And then I think gold becomes relevant again.
Mm-hmm. So you were saying how, I mean, some people think that, gold and silver will increase in value while we see this crisis. What is your perspective on that? Because you're saying that, you probably won't lose out, but maybe not, do you think they'll actually increase in value or not?
I don't, at one point I might have had an opinion, but I'm distrustful of my, as I say, I can barely predict the past, let alone the future. I'm sure you would agree that back in 0809, if someone said, look, they're going to throw $20 trillion into the system, that we would undeniably have runaway inflation. And beyond the asset inflation, which is inflation, we didn't experience runaway CPI inflation. And boy, I would have bet a lot of money. I did bet a lot of money on that. And I don't know too many people who are gold bugs who didn't think that such interventions would be highly inflationary. So to say what will happen in a crisis, there's so many feedback loops and crises. And these are complex worlds, like predicting the weather, predicting earthquakes, or predicting avalanches, right? I hope it goes well.
Now, if we look back at 2018, it was the worst year for stocks since the last crisis in 2008. What was your perspective on how stocks fared in 2018?
Well, besides the apparent loss of sort of stability, a metastable refers to a system which has the appearance of stability, but it simply hasn't yet done what it's supposed to do. A big block of ice in the middle of July will sit there, and it doesn't just melt instantly. So the block of ice sitting out in the sun in July is metastable, but we all know in the end there's going to be a puddle. Metastability is a big, huge pre-avalanche setup where it looks stable, but it's just waiting. I did an experiment in metastability the other day. I had a bowl and I was running water in it, and the water kept whooshing through the bowl. So the bowl never filled, and I was watching it thinking, the water just keeps going through, and then all of a sudden it filled. And I go, that was so interesting. So there was some micro event that allowed the bowl to fill, and then the water quit splashing out. I'm going to make a YouTube of the thing. It's really cool. The VIX, right? I don't know how much your readers paid attention to the VIX, but last year I wrote about the VIX being this crazy thing. I spent a lot of ink on the VIX. And I said, this thing is so risky. And then the VIX died, right? So the VIX is basically betting against the market being volatile. The people who shorted the VIX shorted volatility. And it was causing the markets to go numb. And I wrote about how this thing seems nuts. And then the VIX, in I think it was February, died. Now, it didn't just die. It had a bad day. It dropped 15%. And then 45 minutes after the close, it went illiquid. and every VIX short trade just closed up. The whole thing just vaporized, and they just terminated the funds, and it took 15 minutes. So if you can wipe out billions and billions, some have said trillions, in 15 minutes, you should respect these markets.
Now, looking forward here, besides if we talked about precious metals and investing in precious metals, besides precious metals in this economic environment, what is your perspective on sectors that you're looking at right now for possible gain?
Well, to the extent that one can make a pretty compelling, to the extent that I believe the U.S. market is 2x overvalued, I'm uninterested in that. Hussman did a great analysis and basically looked at valuations, how companies in the 10 deciles of valuation do during a big secular bear market. What he found is that the 10 valuation deciles all get crushed about the same amount, which means if you got a company that's cheap compared to others, after a big secular bear market, it's going to be unbelievably cheap. And when you go from let's use PE ratio as a metaphor, even if it's not valid. If you go from a PE of 20 to 10, you're going to lose half your money. But also what's important is half the shares are going to be below 10. So if you buy a stock you think is a low PE at 13, that thing could end up at 7. And so you're still screwed. And so once you get a secular bear, there's no good place to hide. There's no good place to hide. And so they say, oh, what about emerging markets? They say they're cheap. My bet, this is not well reasoned, it's just a bet, is that they'll get cheaper too. I don't think the United States can go down the tubes without dragging everyone with it. Meanwhile, you've got evidence China's already in big trouble. And we have no idea what a monstrous country like China, when it deleverages, will do to a system. We don't know how they're going to respond. We don't know anything. So China puts me in fetal position. So where am I at? 25% metal, 60+% cash. What is that? Laddered to your treasuries. And then some smattering of garbage, some of which is just because it's not easy to control.
All right. Well, David Collum, thank you so much for your time today. I guess before we let you go, did you want to share with the viewers any last thoughts you had and where they can find your work online?
You can find me on Twitter, David B. Collum, Collum. I'm in the chemistry department at Cornell, so if you really need to find me, it's pretty trivial, with Google. My year in review is posted at Peak Prosperity, and it's a beast. It's long. I write this thing in the month of November, edit it in early December. It's about 165 pages without links, and the links are another 100 pages. I try to make it funny. I try to make it honest, and I try to find the themes that people are missing. There's a chart in there, that the scariest chart of all, that shows that if you buy at a peak on an inflation-adjusted basis, you will tread water for anywhere from 40 to 75 years on a basis of capital gains. And no one else is posting that chart. And that's it. I don't know. I just watch the news that comes at me and adjust accordingly. But I'm not going to buy anything until we are at some sort of panicky situation. And I don't think this time's going to be a V-bounce. I think we're going to panic, and I think we're going to get down there, and I think we're going to camp there for a while. Just like Japan, I think, at some level.
All right. Well, David Collum, thank you so much for your time today.
You're welcome.